2018. I want to talk to you a little bit about mortgage fraud and what the banks, realtors, and title companies and attorneys, if any are involved, and they usually are, because all of these entities use lawyers to write their contracts. If you don't understand the fraud that's happening, you can't figure out the remedy that you need to ensure this fraud on your mortgage is corrected. When you buy a house, you expect the real estate agent or realtor to tell you everything that's wrong with that house, to their knowledge, which they should have gotten from the people who technically own the house. It's called full disclosure, and there is a document, and you're supposed to ask for that or make sure you understand everything about the house before you buy it. In this transaction of purchasing a home, it is the realtor's responsibility as a knowledgeable professional to go over the contract with you. And if you're dealing directly with a bank, they are obligated to tell you everything that's going on in that contract. But it's also up to you to read the contract. As such, many of us who've purchased homes and land before, we do our due diligence and read the contracts. We go over them with a fine-tooth comb and think we've dotted all the I's and crossed all the T's, when in fact, all the I's and T's aren't there in writing. What's really going on here is you're signing a promissory note. When you sign those papers, in 9 months, that promissory note turns into a securities agreement. Once this is turned into a securities agreement, they would technically have to have your permission to use your name on a securities agreement. Every closing I've ever been to, not one person gives you full disclosure that in 9 months you're going to have your name on a securities agreement. This is actually securities fraud because they know and you don't. The penalty for securities fraud is up to 20 years imprisonment, $500,000 fine, or both. This is a really huge issue. You can look this up right online, just like I did. When you put in, is a promissory note a security agreement? Here's what you get. Loans from banks and other institutional lenders are always made using a number of documents, two of which are a promissory and a security agreement. In general, the promissory note is your written promise to repay the loan, and a security agreement is used when collateral is given for the loan. This is by smallbusiness.cron.com. Exactly when, during a closing, did you sign a security agreement? I've been to many closings at one time. Have I ever signed a security agreement? However, it says right here in this definition, a security agreement is used when collateral is given for the loan. The house or property is used as the collateral for the loan. That's what they tell you. But there's really no loan. That makes this entire transaction, which you signed in good faith, a securities fraud issue. You've got evidence a crime has been committed because you have the mortgage and the promissory note in your hand. You have a copy of that. So what's your remedy? Your remedy is that you can file the paperwork within 5 years of the discovery of the fraud. Since there is fraud there, the House Joint Resolution 192 of June 5th, 1933 gives you the remedy for this fraud, and that is the way you discharge. You can discharge with any instrument which was certified by the United Nations Convention on International Bills of Exchange and International Promissory Notes, and it has to meet certain criteria, which is in that document, and I've got the link below. The criteria is really simple. With the confusion that's out there, it's been a nightmare. It's like rocket science. But if you look on the first page of the UNCITRAL, it is very clear what the requirements are, and you have to decide by using this document what your remedy is going to be. This is how people discovered the use of accepted for value, was by using this document of the UNCITRAL, and using that, they put together bills of exchange using the HJR 192 and testimony by people such as Walker F. Todd, who talks about the difference between money of exchange and money of account, which is illegal to mix those two types of money. Not only have you been under a fraudulent contract with your mortgage, you've been paying a mortgage you never owed in the first place. You can take your chances in court. You can sue them for securities fraud. But as you should know by now, the court's not under the jurisdiction of the Constitution because there's admiralty law in the courtroom. When you go in there, you see that French flag, that's your first clue. You're most likely going to lose your case. Then you're going to try to move that case into an appellate court eventually. And most likely, you're going to get a closed hearing in the judge's chambers, or they're going to clear the courtroom before you can even do anything about the case, because at that point, they're going to want to settle this case. You've discovered what they're doing, and they don't want other people to know what the remedy is to that situation. They try to keep it quiet. Your other choice is to write your political status by filing the first 15 documents and then using the accepted for value process to discharge the debt which you really don't owe in the first place. The reason you didn't owe it is because the promissory note, which you signed at the closing, is fraudulent. They used that to get the money for your mortgage. The debt was already paid with the promissory note, and they got the money from your Treasury Direct account. When they have that promissory note, they took it to the TDA and got that money. It's never been a liability for the bank. There has never been any real loan to begin with. The people who own the property are getting that money from the bank via the TDA, and that's how the fake loan is funded. The bank still has that promissory note in their hands. They don't cash it in when they go to the TDA. They just show them this as a piece of collateral, and the mortgage itself is also a form of collateral, and it becomes an insurance policy. They select a system. The bank selects a system, usually a mortgage electronic reservation system, or MERS, and when they change it into an electronic transaction, it becomes a banker's record, and you cannot control that promissory note anymore. It's no longer public record, and you're not going to be able to find it. Then they take that note and sell it to the next bank, but they can't sell it before 90 days. After 90 days, they start negotiating this instrument for a discounted sale. In reality, the bank is just the broker of the deal. They really didn't do anything in the transaction at all except make money. They can sell that promissory note right away, or they can keep it for 9 months and turn it into a securities agreement, or they make even more money with your one signature. In a securities agreement, you're supposed to be part beneficiary if that securities agreement is in your name, which in this case it is. But you're not benefiting anything from this securities agreement. In fact, the bank, if you tell them this, they're going to say your benefit is the house itself. However, there's no benefit to you because, one, you are paying a mortgage you don't owe. Two, you're paying interest on a mortgage you don't owe. Three, you're paying a loan that never existed in the first place. And four, they committed fraud on you by not giving you full disclosure at the time you signed that paperwork. Therefore, if you understand this, you've got at least the first step to understanding how to take back your house, how to relieve yourself of this fake debt that you don't owe, and write your status to correct your side of this equation. If you write your status and there's a judgment against you regarding your house, you can serve the judge with a certificate of service with the judgment attached, since the judge is the trustee of the court, if you've declared yourself a living man or woman during that case, which you should. And the judge is also the banker in a securities agreement, and the prosecutor is the broker in the transaction as well. Therefore, you do have remedy regardless of the situation in your house. Doesn't matter if you just bought it. Doesn't matter if you live there 30 years. Doesn't matter if you're in foreclosure. You've got the remedy. So as you can see, in order to make sure you have the proper position to enforce this mortgage relief, you have to have your position right. This is really important. You've got to get these documents, and you've got to fill them out and fix your status. So here's what we're going to do. We're putting together a new package for do-it-yourselfers so you can have as much of this information as you need. We're trying to do it by state. So if you live in California, we've got the California package. If you live in Florida, we've got the California or the Florida package. They have a different UCC than other people. So each one of these go by state, and you're going to have to deal with your county, but we have that stuff in the package as well. So you see, we're going to give you the opportunity to get this by state. And I think it will be easier for you. That package, if you want to pre-order, is going to be $150 right now until March 1st. So you can pre-order that package. And then on March 1st, we're going to raise it to $200. So these states will be completed by March 1st. All right. So you got to give us between now and March 1st to get this package to you if you pre-order by state. Now, we're still offering this TDA account paperwork package, which is the first step in getting your political status corrected. Okay, that's what we're offering by state, but you can get the $350 package until February 15th, and then that's going to raise to $450. I'd suggest you get in before it raises. I think that's the best thing to do to save yourself $100. You can go to tdaaccount.org and click on the Shop and Downloads tab. You'll see the TDA paperwork is the first thing in the store, and then the pre-order for the state paperwork, which is going to be the second thing in the store. And for sure, you're going to want to work with Tom on your credit. He's doing a really good job working with people to help you with your credit issues. Go to DurangoCreditRepair.com and you'll sign up. He'll send you an email. Please respond to him and you'll get a phone call. We want to make sure we're all on the same page here so we can start using the funds we're entitled to and fixing your credit situation.